Hello everyone, welcome to chapter 13. In this chapter, I'm going to teach you about seasonal tendencies. Now, just like I had promised, level 3 and 4 are going to be completely about time, right? And last week we started level 3 with chapter 12, in which I explained the open high low close concept, which initiated the process of me explaining time to you. Now, each chapter that I'll release weekly on level 3 and 4 will be specifically about time, and I'll make sure that the time aspect of the charts are fully covered till the end of level 4. After that, we'll start integrating everything with each other, and along with that, I'll give you my entry models and everything else that is needed, right? So, first up, we got our seasonal tendencies. Now, this is a really important concept that we're going to be using in our higher time frame analysis, right? This concept has been around for a while, and it's not just ICT traders that use it, but fundamental traders as well, right? This concept is predominantly based around time and takes historical data into consideration. And in this chapter, I'll show you how you can use it to assist you in your higher time frame analysis. So, first off, we'll start off with introducing seasonal tendencies, right? What are they, how they can be used, and most importantly, how you should approach them. So the basic definition I could give you for seasonal tendencies is that basically it's basically a roadmap of the past price action or past performance of assets in different markets, right? Now what I mean by that is that this particular concept takes past historical data from the range of 10 to 15 years all the way to 40, 50 years, and based off all of that data it shows us a particular theme in price action for different pairs and markets. Now we all know that these markets are controlled, right? And there are specific and definite logical concepts and themes that it follows, right? We've already discussed some of these concepts and these things like market profiles and so on. We know that these market moves in a logical framework with specific footprints and signals, right? Now the way we dissect these footprints is by using concepts like key levels, market profiles, daily ranges, and so on, right? Now it's not entirely possible to completely crack what the future would do next and what price is trying to reach for, right? But with the help of historical data, we've seen from time to time that these concepts that ICT has introduced, like market profiles, daily ranges, and key levels, right, when they're combined with each other in a proper way, it can help us and assist us in finding high probability conditions where we can accurately and precisely predict and anticipate price action with a great deal of confidence and accuracy, right? We've came to those conclusions based on the data that we've collected and based on what price has done in the past, right? And the same way we've got this concept called seasonal tendencies, and throughout the help of these concepts we've collected huge sums of data about different pairs from the last 20 to 40 years, and we've managed to summarize that data into specific key points and footprints, right? Now, what that data shows and tells us is there are certain times of the year where price consistently each year follows a specific pattern, theme, or rhythm, right? We know that price goes from one market profile to another. In the same way, it goes from one key level to another. It goes from generating liquidity to purging liquidity and then neutralizing that liquidity and then resetting the whole cycle, right? And all of these concepts, you can see that price is following a logic and a specific detailed cycle with rhythmic sequences and patterns, right? In the same manner with seasonal tendency, we've found out and we've came to know that there are certain times of the years called seasons of times where price follows a specific rhythm or theme, right? Which means that at specific times of the year, price consistently shows that it either forms bearish price action or bullish price action, or it follows a definite trend. Now that is proven by the fact that we've collected data, not we, but actually firms have collected data from the last 40 years, and then they've summarized it, and then that data shows specific footprints and signals that price forms and that price have formed consistently over the past 30 to 40 years, right? So based on that data, we would have some level of idea about what price could potentially do at certain times of the year, right? You can see that now we are talking about time and we are using these concepts to tell us where price could expand and where price could do different things, right? That's the main theme of time, to know when is gonna stuff happen. That's what time is all about, knowing when. The when aspect of the chart is basically the time. Now I'm going to fully explain this to you in this chapter. but first let me fully introduce you to it, right? So the second point is that seasonal tendencies should never be viewed as a universal remedy or a be all end all concept, right? And what I mean by that is just like the rest of the concepts, you're never gonna use it alone to predominantly form the trading idea or generate one, right? You'll never approach any concept like that, right? Not even CRT. You must use it and integrate it with the rest of the concepts, right? Before using it to generate trading ideas. In the same manner, even seasonal tendencies are going to be used along with the other ones. And just because seasonal tendencies is telling you something doesn't mean that you're going to marry that bias or force that idea on the markets, right? You can see that all of these concepts are interrelated with each other and connected with each other, and they'll always be used logically with one another and never alone, right? Third point is that seasonal tendencies are used as a confluence to add more conviction and confidence to your already built ideas and frameworks, right? Or simply your higher time frame analysis, right? So seasonal tendencies is used as a confluence, right? Remember that and write that down. And last but not least, I've already discussed this with you, which is that it's a huge sample size of data of the last 15 to 40 years, right? Now moving on, here we got the seasonal chart, right? This is how basically a seasonal tendency chart looks like. Like if you've never seen one before, then this is how it looks like. Now this looks like a typical line chart, but there's a lot of stuff behind it that you have yet to discover and learn. So let me explain. Now before we start, if you're wondering where you could get these seasonal tendency charts, then don't worry, that's not a big deal, right? You can find it from Google or by searching it, but also if you want me to gather all the important charts for you, and then you can let me know. I'll gather them for you and send it here in the main page, right? Now let's get back to the topic. Now all of this price section that you see right here is basically a summary of what Euro USD has done periodically and seasonally over each year throughout the last 30 years or throughout the last 3 decades, right? It means that this seasonality chart is showing you the summary of what Euro USD has done on average each year throughout each month over the last 30 years, and it has collected that data and summarized it into this single chart, right? It's a summary of all the price action of EU of the last 30 years, and you can see right here that Euro USD or EU has followed a certain theme or pattern here, right? You can see that during January, periodically and seasonally, based on this data and based on this summarized data, it has gone lower and formed bearish price action till the end of March, right? Similarly, it formed bearish price action again during the month of May, periodically over the last 30 years on average, right? Now remember, I'm not saying this out of thin air or out of nowhere, right? This is real, actual, and factual summarized data of EU from the last 3 decades, right? Right? Firms and different institutions have gathered data from the last 30 years and they've summarized it into this single chart. And this chart basically shows us the average of what Euro USD or EU has done, right? Now, what you also need to remember that it doesn't mean that EU has done this price action literally every year, right? It's not like that. It doesn't work like that. It only shows that EU has done this price action or formed this price action on average over the last 3 decades, right? It's taking the average of the data, not the literal data. So remember that too, right? Now, what all of that means is that on average, periodically and seasonally, EU has a tendency to do a certain thing at a certain time during a certain month based on this data, and then you can use this data as a confluence and as an extra point to gain conviction in your higher time frame analysis or to support your higher time frame trading ideas, right? For example, Euro USD has a seasonal tendency or a periodic tendency to form bearish price action from January to March, right? Now again, it doesn't mean that it's going to do that every single year. and that you should go and trade it right away, right? It doesn't work like that. But what it does show, that more often than not, EU forms bearish price action throughout this time frame that I talked about. It has an inclination to do certain things, right? It has a likelihood of forming bearish price action and going lower during May, right? Now again, remember, I'm gonna say this again, it doesn't mean that it's gonna work every time, right? It just shows that it's highly likely, right? And it has a higher probability for EU that it could do that if you can match it with the correct framework and concepts based on the things that I've shown you in the previous chapters, right? If you can combine daily ranges, key levels, and market profiles to form a trading idea to form a bearish trading idea during the months of January to March, then you can use this seasonal tendency to gain even more conviction, because you know that on average over the last 30 years euro has done and formed bearish price action. And now this year I've used all of these concepts that Sham has shown me, and based on all of those concepts, it's telling me that price will go lower, and now even seasonal tendency supports that idea. So you're going to be more confident in your trading idea that you generated based on the concept that I've shown you, right? So now you can see you can be more inclined to look for shorts or bearish trades during this time of the year from January to March, right? This is how you use it. Similarly, you can see that all of this other price action right here on this chart is showing you, which is telling us that historically over the last 30 years, that is what EU has done on average, right? And this is what EU is inclined and prone to do at these times, right? So make sure to take it with a pinch of salt, right? Remember. Now this stays true for all the other concepts as well, right? For example, if you're using key levels, and if you use key levels alone without anything, then you wouldn't have a single clue about what price is doing, and your accuracy would be shit, right? And you'd be just messing around. But you know that if you use it together with everything else that I've discussed, and that is going to increase your accuracy by a huge margin, and your analysis and execution will become more accurate and precise, and you'll have a great deal of conviction in your analysis, right? Now even though that stays true, we know that it won't work all the time, right? For example, if you take and generate 100 trade ideas and do 100 analysis, then not all of them will work, right? As a trader, we know that these losses and being wrong is inevitable, right? It's a part of the process, right? But what you do know is based on these concepts, you're gonna have an edge, and that edge is gonna make sure that over such a huge record of data, and by doing 100 analysis, you're gonna make sure to have 70 of those analysis correct, right? 70 of those analysis would work, but the rest of the analysis and ideas would not work, and you would lose money on them. But we know that that's completely fine, right? And you can never change that, right? The only way it's going to work for you is if you embrace that fake. If you're going to seek perfection and always look for another thing so that you could perfect the art of analyzing the charts, then it's never going to work for you, because the amount of variables that are involved. But if you just accept that idea, and you always face losses and embrace them, then what you're going to make sure is you're going to make sure that the edge is working for you in the long term, right? That's what trading is all about. uh, but again, you also know that with the accuracy that you have and the trade ideas that you will, due to these concepts, will give you such a good edge that the profits you earn with the winning outcomes will always outclass and outweigh the losing ones, right? So at the end of each month, or the end of each quarter or year, you'll always end up with profits, right? That's what trading is about. You should never measure your profits on a daily basis, on a weekly basis, right? You should only and always look and zoom out and look at the monthly data and the quarterly data and then decide whether you're profitable or not. You can have a losing day, you can have a losing week, but that's not gonna decide whether you're gonna be profitable or not, right? That's never gonna decide your future. But what the way how you can measure and gauge your performance is by looking at your monthly data and looking at your quarterly data, right? And then that's how you're gonna know that whether you're profitable or not, right? You need to remember that you will never be right all the time, right? But with these concepts, you're gonna be right and correct more times than you are wrong, which is our objective as a trader, right? All of us are here so that we could learn to win more and lose less, but also at the same time accept those losses, embrace them, and accept them while also winning trades, right? There will always be a balance no matter what, and no matter how hard you try. Even the best traders like Larry Williams or even ICT has losses, even Romeo has losses, right? And they've all admitted to it, right? There's not a single goddamn person who doesn't have losses, right? So remember that. And the next time you take a loss, instead of crying about it or losing your mind, just take a deep breath, step back and hug it and embrace it, journal it and learn from it, right? Instead of letting it mess up with your performance or mess up with your psyche, right? So when you're using these seasonal tendencies or any other concept, there always be times you're going to be wrong, and they are unavoidable and inevitable, right? But when you do 10 analysis, right, based off of this, you'll be right and correct more than you're wrong, which means out of 10 you're going to be right about price at least 7 to 8 times, right? Now, moving on to the next slide, here we're going to discuss how we're going to use bullish seasonal tendencies in our higher time frame analysis, right? And how we're going to be using it and how will it assist us in finding good trading ideas, generating better trade ideas, right? So let's move over and let's learn. So right here you can see that we've got this Canadian future seasonal tendency charts, right? On the bottom you can see the months, which is our time of the years, and on the chart you can see what the Canadian future chart has done seasonally and historically each month over a period of 30 years, right? Right here you can see that 35 is written, which means that they've gathered data from the last 35 years. They've gathered data from the last 35 years and have summarized it into this one chart, and now we're going to be using this seasonal chart to assist us in our high time frame analysis, right? Now also one important thing you need to remember, and you must write it down, is that this is a Canadian futures chart, right? It's not the forex chart. So if you're trading USD CAD, right, or USD CAD, which is the dollar Canadian forex CFD chart, right, which is a forex pair, then for that particular pair, all of this information and all of this chart would be inverted, because in USD CAD the dollar or DXY side is in front, which means that they've paired the Canadian futures with the dollar, so you're trading against the dollar, right? Did you got it? Let me say it again. This chart right here that you see, this seasonal tendency chart, is of the Canadian futures chart, right? Which is different from the Canadian dollar forex chart, forex pair, the USD CAD. They're both different. They are inverted of each other, right? Because here you're trading with the Canadian dollar, but on the USD CAD forex pair, you're trading against it because you've got the USD in it as well, right? So all of this price action on this seasonal tendency chart will be inverted and flipped for USD CAD, the forex pair, right? So for example, right here you can see that from October to November, the Canadian future chart has historically gone lower and formed bearish price action. Then that means that USD CAD, which is the US dollar against the Canadian dollar forex pair, that particular pair has historically gone higher from October to November. Do you get it? It's completely inverted, right? You can see. It's simple. The whole seasonal tendency is the same. It's just that for the forex pair, all of this is inverted, right? If you traded the Canadian future charts on the future market and not the forex pair, then you can use this seasonal chart without inverting it. But if you are trading USD CAD, which is a forex pair and not a future asset, then for that you would invert this chart and use the inverted info, right? You must look at the name before deciding it, right? For example, the Euro USD seasonal chart that I showed you earlier was a Euro USD seasonal chart, which means that if you are trading the Euro USD forex pair, then you would use the same seasonal chart without inverting it, right? Or without doing anything with it, right? Because their name is the same, right? Both are Euro USD, nothing is different. But here this is just the Canadian future. I said there's no USD behind it or in front of it, right? But what you trade on the forex pair is USD CAD, right? And not just CAD. So it will be inverted, right? It's just simple thing, right? Nothing complicated, right? Hopefully you got it, otherwise I'd be really disappointed. Okay, so let's get back. Right here you can see that seasonally or periodically the Canadian dollar has shown a tendency or likelihood to form bearish price action or to go lower from September to December, right? Which means that historically it's proven from time to time that more often than not, according to this 35 years worth of data about the Canadian dollar goes lower from September till December's end, right? Now, if we're going to use this information on the USD CAD forex pair, then we're just going to simply use the inverted info, right? Simple. So for USD CAD, it would be that USD CAD seasonally has a tendency to go higher during this particular time in these particular months, right? A Canadian dollar has a tendency to go lower, but USD CAD has a tendency to go higher, right? You know what I mean. Now let's look at some price action on USD CAD from last few years and let's see what we've got.